what we thought of basically doing in this study circle meeting is not to, in fact, go specifically into what changes have come in only, but to take them on the basis of how practically we are going to deal with them, the tax positions which we are going to take, and the impact of, I would use the word arm twisting, basically, which has been done from the revenue side, where certain changes have been made in a manner where it comes out now that compliance is going to be a very crucial task. And it appears that now government wants all of us to take the automated compliance rather than taking manual figures from various sources, because a slip here and there in terms of numbers in various returns, a delay in returns, it may cause not only the tax burden, but also the manner in which the business is to be done. The process will be that I'll open with the issues. Basically, what we have done is we have chosen 6 specific issues around which our today's study circle meeting would revolve around. I'll just take that specific issue. I'm understanding that all of us have the case studies before us, so I'll just explain the brief amendment which has taken place along with the case study or the issue specifically in that which we want to deliberate upon, and then the forum will be open for all the participants for their inputs. I would summarize the input from my side and anything additional which I can put in, and then final words from the Ashit bhai. In case anything else could be there, I'm sure Ashit bhai will take care of it.
Yes, don't worry. First of all, you present your views, we will take the views of the participant, and if anything to be added, definitely I would love to put it.
Right, sir, right. Yes. So that's the agenda for today, which we have 6 things. And without wasting any time further, we'll specifically go to the case study number 1, which you have. Basically, the most, I would use the word glamorous amendment, which has come in respect of input tax credit. That is the amendment in section 16, subsection 2. Along with the subsequent change which has happened in the most controversial rule, I think ever since it has been brought in, that is rule 36 sub rule 4. So what has happened is that we have this 16 subsection 2, wherein there are certain conditions which have basically been given in terms of all those who have to take input tax credit, and their entitlement has been subject to these conditions. Up till now, we had 4 conditions up till 31st of December 2021, where I had to actually receive the invoice, goods or services. I have to ensure that I file my GST return, and it has to be also ensured that supplier pays the tax. Now, with effect from January 2022, we have one more condition in the form of 16(2)(a), which does not only says that the supplier, that as a recipient, when I am entitled for the input tax credit, I should have the invoice, but along with that, that invoice should have been basically details of that invoice or the debit note, as the case may be, has been furnished by the supplier in the statement of outward supplies. And not only he should furnish those details in the statement of outward supplies, to which generally we call it as GSTR1, but it should also be communicated to me as a recipient in the manner which has been given in the section 37. So that means 2 things which have been added by the 16(2)(a) is that the invoice on which I am taking input tax credit, the details of it has been punched by the supplier in the statement of outward supplies, and it has been communicated to me in a specific manner. And with this, there has been, as I said, a related change in rule 36 sub rule 4. And if you compare this 36 sub rule 4 up till 31st of December 2021 and what it is going to be there, or it is there from 1st of January 2022, we will see that there has been a comprehensive change in the manner in which the drafting has been done with effect from January 2022. Because up till December 2021, this rule was written in a positive sense, in a sense to say that it always said that input tax credit to be availed by a registered person in respect of invoices or debit notes, the details of which have not been furnished by the supplier under subsection 1 of section 37 in form GSTR1 shall not exceed 5% of the eligible credit in respect of those invoices and debit notes. So it kind of said that I am entitled to take the credit, I can avail the credit, but all those which are not have been furnished by the supplier in GSTR1 and what I am taking in my GST returns, the difference of it cannot be more than 5%. Whereas now when you look at from January 2022, it is worded negatively. In fact, it says that no input tax credit shall be availed by a registered person in respect of invoices or debit notes, the details of which are required to be furnished under subsection 1 of section 37 unless. And if all of us look at it very closely, You look at section 16 subsection 2, it also starts in a similar manner, which says, notwithstanding anything contained in this section, no registered person shall be entitled to the credit of input tax in respect of any supply of goods or service or both to him unless, and then we have 5 conditions. On a similar analogy, we have now this amended 36 sub rule 4, and it puts those 2 conditions which are mentioned in 16(2)AA newly inserted. That is, details of such invoices or debit notes have been furnished by the supplier in statement of outward supplies in form GSTR1, and the details of such invoices and debit notes have been communicated to the registered person in form GSTR2B under sub rule 7 or rule 60. So the section, it only talked about basically putting those details in the statement of outward supplies and communication in the manner given in that particular section. 36(4) in fact kind of materializes it, puts that into in the procedure which would be there, and it uses the word that specifically those invoices and debit notes of which input tax credit we are trying to avail in our GST returns, they should have been punched in GSTR1, and not only punched by that supplier in GSTR1, they should have been communicated to me in a form which is called as GSTR2B. Interestingly, up till now, we did not have any reference of GSTR2B up till 31st of December 2021, though through GST and government has always been trying to explain that GSTR2B is going to be an important document. But that important document now gets validity and a legal mandate or a sanction through this Rule 36 sub Rule 4. And there, that difference of GSTR 2A and 2B comes into picture. When all of us look at Rule 60, that Rule 60 sub Rule 1 talks about basically that when somebody puts in the details of outward supplies in GSTR1, then details of that outward supplies are made electronically available to the recipient in GSTR2A. So basically GSTR2A is nothing else but statement of inward supplies. If you may put it, that inwards of that outward supply which my supplier is punching in, what I get it is GSTR2A. Whereas if I look at 60 sub rule 7, the reference of which has been given in Rule 36 sub Rule 4 now, it says that now it should be communicated to me in GSTR2B, which is an auto-drafted statement containing details of input tax credit. And when all of us know that the biggest difference between 2A and 2B is that 2A is a dynamic document, whereas 2B is a static document. And from here, it comes out quite clearly because we know that GSTR2B gets generated on the GST portal on the 14th of the next month. If I'm filing the return for or my supplier has filed the return for the current tax period, then for the recipient, it will get generated in the 14th of the subsequent month, meaning thereby if the supplier has not filed his GSTR1 by the due date, maybe using the if facility or in general monthly GSTR1, then it will not get auto-populated in my GSTR2B. Because 36(4) now requires compliance or matching with GSTR2B. Earlier, we did not have any reference in 36(4) regarding 2A or 2B. So earlier, even if somebody was filing GSTR1 late, still I was able to see that in my GSTR2A, and I was matching it when I was claiming the credit in my GST returns. I'm giving this background because this background is going to be helpful when you look at the case study. And with this, now we have 3 separate time zones for basically input tax credit, which is going to be very important for a tax consultant whenever he or she will be giving an answer to the questions of the department, where we have first tax period starting from July 17 to October 2019. Up till then, we did not have 16(2)AA, we did not have 36(4), we did not have GSTR2 and GSTR3 working, which in fact still are not in place till date today. And that is why all of us have this clear understanding that whatever input tax credit I have availed in my GST returns, it can be on the strength of the invoice which I have, and no matching as such with GSTR2A is required up till this period. Then we had 36 sub Rule 4, but the manner in which 36(4) was written, 2 things which always basically came to our mind is what is the mother provision under which 36(4) is there. That matter is still under challenge before the various high courts. And second, even if matching needs to be done under 36(4), whether that needs to be done on a monthly basis or on a yearly basis or on GSTN-wise basis or on a cumulative basis. And for that, we did not have any standardized answer, neither any circular clearly talked about it. And that is why all of us have been following our own approach of doing this matching. Now, with effect from January 2022, when Rule 36 sub Rule 4 clearly uses the word such invoice or debit note for the purpose of communicating to the recipient, it comes out that now matching needs to be done on a document to document basis, but not or at a supplier level or at a GSTN level. And second, that matching needs to be done for each tax period. That's what it comes out when you read this specific 36.4 read with the amended 16.2 AA. So the compliance picture, which looks like now in front of us, all of us, is that in any business cycle, we have all these processes. Probably government has also understood that that's how any business would work. And they are saying now 4 things which basically happen in a specific sequence is that maybe supplier would raise an invoice. But after raising of invoice by the supplier, as a recipient, first of all, I will receive goods and services. That is number 1. That would be the first condition as per 16.2 of the Act. Then I will basically match that receipt of goods or services with the invoice which is there, and I will account that invoice in my books of account. Condition number 2 to be satisfied. Condition number 3, now that communication of that invoice or debit note in my GSTR 2B, and then filing of GSTR 3B on the basis of earlier these 3 conditions have been satisfied. Interestingly, in all of this, that condition that supplier has paid the tax, you can't find that loop getting completed in this whole system, but that is not a topic for discussion today. And government understands that out of these 4 things, at least 2 are done up till the books of account, the blue line which you see, and the green is something which is done on the GST portal. Now in this background, I am opening up the discussion for all the participants with this. Let's say we have a case in hand where there is a supplier called B and a recipient named AZ, and we're talking about from the recipient's perspective whose name he has kept as AZ. Let's say supplier has raised an invoice on January 2022, on 28th of January 2022, and AZ is going to claim the ITC of it in its GSTR 3B, which is going to file for the month of January 2022. Now the problem is that AZ is not able to see the invoice in his GSTR 2B for the month of January 2022. And there are 2 reasons which have been 2 alternate reasons basically which have been given by the supplier. First reason is they are saying they had missed the invoice punching in GSTR 1 for January 2022, and they will put that in February 2022 GSTR 1. So it will auto-populate in GSTR 2B of the recipient on maybe 14th of March 2022. Second answer they are saying is that they have delayed filing of their GSTR 1, and that is why in GSTR 2B, which will be generated subsequently in the next month, that is on 14th of February 2022, this invoice is not getting reflected. Now the question which we have in hand is whether this recipient can still claim the credit in January 2022 GSTR 3B, considering that this ITC will not auto-populate in GSTR 2B for the month of January 2022. It may auto-populate subsequently in the next months, but can he claim the ITC in GSTR 3B first, and then the auto-population can happen subsequently? If that is possible, that's the first point on which we are deliberating upon. And second point, let's say it gets auto-populated in GSTR 2B after the September 2022. Let's say that supplier does not punches that in up till September 2022 and it punches subsequently. Whether that would mean that now, as per the provision of section 16 subsection 4, that ITC would get lapsed and the recipient would not be able to claim the credit. So now I'm opening up for all the participants here. I would request all of you maybe to chip in with your views, and then we would summarize from our side. Anybody who would like to bring his or her view, you may raise hands. We may unmute them. Okay. So I will just repeat the question. Yes, sir.
Hemant here.
Yes.
Yes. First of all, with this new provision coming into place from 1st of January 22, so credit as far as 2B is concerned, we need to go as per 2B only.
Right. Okay.
Because that is now it is within the Act. So something which is within the Act, which is within the provision, we need to first of all follow the provisions. So as per provisions, first of all, we need to go as per 2B only.
Okay.
So since as in first point we have said that under 2B, the invoice is going to be raised at the person is uploading the data at a later subsequent period. So credit will flow in a subsequent period only. Now the problem will, the main problem is that if that is coming after September 22, then what will be the situation? Whether the time is getting less and whether I would not be able to claim the credit. So whether I am going to lapse that credit. So in that case, what it can be done is that I will claim the credit and I reverse the credit subsequent in the same month and reclaim the same when the same is getting reflected in my 2B, so that I am abiding the provision also and I am not claiming excess credit also.
Okay. So Himang Bhai is saying basically that the prerequisite is basically credit should first come in GSTR 2B, then only I will flow that in my GSTR 3B. For all those invoices which will not appear up till my due date of filing of return for September for 2022, I will claim that credit and reverse in the same month, so that I will have right to reclaim it as per Rule 37. Okay, Mr. Subramaniam, I think he has raised his hand.
Sir, here the invoice, am I audible, sir?
Yes, sir.
Here the invoice date is 28/1/2022.
Right.
So no doubt the recipient he has to claim in the month of January 2022, provided if it is communicated and fulfilled the condition in 36(4). That is the latest 36(4). That is, it should be communicated through GSTR 2B. Whether it is communicated through GSTR 2B in the month of January 2022, it is not being done in this case. It is not being communicated because it is going into February, because the person has not filed properly. No, said invoices has been missed. So therefore, he has not uploaded in the month of January and he is uploading in the month of February 2022. So therefore, my view is that he is not eligible for the month of January 2022, but he is eligible in the month of February 2022. The reason is in the February 2022, this will be reflected in GSTR 2B. Okay. So from 1/1/2022, we have to follow Rule 36(4). And I am also asking only one similar question, sir. I have one doubt. Whether Rule 36(4) is backed by the proper section, whether it is backed by the Act, as on today, as on January 2022, whether it is backed by Section 43A, whether it is backed by the Act, that also, if it is not backed by the Act, then can we say that delegated legislative authority, can they frame rules without any supporting from the section? So this is my views.
So your second question, we'll take that question in the next part, sir. But I think on the first part, you are kind of agreeing to what Himang Bhai also said, that the credit should first appear in GSTR 2B. I'll just, for the sake of members, I'll put an alternate view to this. Can we look at this situation from the point of view of asking this question, whether this condition which is there in 16(2) or in this 36(4), it is a condition precedent or it is a condition subsequent? First of all, no doubt that all these things which are mentioned in 16(2), these are conditions, these are not restrictions. I think to all of that, all of us would agree these are conditions. Once these are conditions, these conditions needs to be satisfied. But my eligibility is there subject to certain conditions. The only point of or question which we have to say is whether can I satisfy them subsequently or I have to satisfy them before. Let's first of all look at 16(2) and all 5 things which are there. Is it a possibility that all of us right now, when we are filing our GSTR 3B, we are satisfying all these conditions before filing our GSTR 3B, or in fact claiming the input tax credit? And why I'm asking this question, let's say all of us have invoiced beforehand, we are receiving goods and services beforehand, but are we ensuring that our supplier is paying the tax before we are filing our GSTR 3B? Probably, in all probability, the answer is going to be no. Second, in respect of the 16(2)(d), which says he has furnished the return under Section 39, is it not the case that first of all, actually we file the return? In fact, that credit and return, they always go hand in hand. It does not happen that first we file the return and then the credit comes in. In fact, we first put the credit in our return and then only that it comes in electronic credit ledger. So it looks like that as of now, if one takes a view by saying that all these conditions are precedent conditions, then as of now, all of us are not following the same. Let's look at some precedents in this regard. And we have a Supreme Court judgment in respect of Tullu India Operations Limited. It's a custom related judgment in respect of exemption. The issue in this case was somebody was importing goods and there was an exemption available. The condition of the exemption was that they were required to basically procure a certificate from a competent authority, which was a separate department altogether, and they have to submit that certificate. Now, they imported goods under a specific exemption notification 121/99, but at the time of importing goods, they did not actually submit the certificate. They submitted the certificate subsequently. Matter went up till the Supreme Court. The issue only was that they have satisfied the condition, submitted the certificate, but certificate was not submitted at the time of claiming the exemption. It was submitted subsequently. The Honorable Supreme Court in this case said that in case of this exemption, basically when we're talking about eligibility condition, you have to read very strictly. But in terms of when you're talking about the condition which to be satisfied, you can read them liberally. If those conditions which are dependent on any action to be done by the other party, and that is not in your control, that is somebody which is completely not in my control, but in control of the other party, and if that action is delayed by the other party, it cannot be casted upon me that I have not satisfied the condition. So even if this condition is satisfied subsequently, I am entitled to that particular exemption. Though we are not talking about the exemption, we are talking about the input tax credit. So I think our case is on a better footing to say that all these conditions, these are not conditions precedent, but according to me, these are conditions subsequent. Even if I claim credit in my GSTR 3B and subsequently I'm able to prove that it is appearing in my GSTR 2B, then in that case, I understand still I have a good case to argue that I should be eligible to claim the credit. That is my understanding, because nowhere in 16.2 or in 36.4 it says that before all these conditions have to have it satisfied. It only uses the word unless. And on this unless, I think Tullu India operation is a good judgment basically to be taken care of. It's an alternate view. Ashit bhai, you have anything to add here?
But I think let all participants to present the view, then I will share my view.
Okay.
Yash, may I?
Yes.
Yeah. Basically, for claiming of credit, first of all, we need to see section 16.1.
Right.
16.1 says that you are entitled to take the credit on the basis of the as may be prescribed.
Right.
Correct. Now the prescribed for prescription, we then need to go to Rule 36.
Right.
Okay. So in Rule 36, 36 sub-rule 4 is getting covered. Like first 36.1 says that you have to have the documentary evidences, that invoice as per section 31 and so on and so forth. 2 is also related, 3 and 4 is also getting covered, because by virtue of 16.1, what happens is that you are getting covered by 36.4 also.
Right.
Okay, what you say is correct, that 16.2. 16 subsection 2 is are conditions which may be subsequent also, which may be fulfilled subsequent. That is absolutely okay. But on the basis of 16.1, when you're going to take the credit in your return on the basis of self-assessment, 36.4 is getting covered there. So my view is that because of that, whatever comes in 2B has to only go in the returns.
Okay. Point taken. So madam is saying because of 36.4, this condition becomes a precedent condition. Okay. We have one more person who has raised hand. Mr. Gaurav.
Yeah. Hi Yash. Gaurav from Goa here.
Hi Gaurav.
Hi. So my point is just a counterpoint. If you look at a larger scheme of things, of course it's not put in the law anywhere, but in the larger scheme of things, the credit is allowed to the taxpayer, the recipient, only once the supplier has paid the tax. It's there in section 16.2c, but there is no other. If you go back to the original GSTR 123 mechanism, the mechanism was that only once we get the money, we'll give you credit. So when you talk about a deferred uploading of the invoice, invoice coming in might to be late, which is because he has filed in the GSTR 1 late, and probably he has paid the tax also on that late. So if he pays the tax 6 months later, how will the government allow me to take the credit 6 months earlier? That's the point I want to raise.
Okay. Point taken. Okay.
So anyone else is there?
No, sir.
Okay. So yes, you want to put anything, or shall I give my comment first?
No, you may give. So from my side, I've given my views. You may give yours.
Okay. So yes, you have very, very rightly observed that section 16.1 gives the condition under the circumstances under which you can avail the credit. Section 16.2 is there, which is a non-obstantable clause, which says that these are the conditions which has to be fulfilled at a later date, because you have rightly said that if we see all the conditions, that has to be satisfied at a later date. So before this amendment of introducing the 16.2 AA from 1st Jan 2022, what the taxpayer was doing, that suppose if the credit is not reflected in 2B, then also they are taking the credit, right? Why? Because after taking the credit pursuant to section 16.1 and read with rules 36, then section 16.2 comes. If we read the section 16.2 prior to 1st January 22, there was no mechanism which says that there is a restriction if it has not been shown in 2B. So that means I am eligible for the credit, and on the basis of that, everyone was claiming the credit, irrespective of the fact whether it is shown in the 2B or not. Then it has been realized that now we have to do something, government, and therefore probably from January 22, this AA has been inserted to plug the loophole. Now again, let us try to read the whole AA, what it tries to say. It says that same thing section 37 says, and it says that the details of the invoice or debit note referred in clause A has been furnished by the supplier in the statement of outward supply, and such details have been communicated to the recipient of such invoice in the manner specified under section 37. Now, if we go to section 37, it gives the reference to rule 59, which says the filing of the details of outward supply, and which says that the 2B, if it is shown, then only you can get it. So if we read the whole thing together, then it appears that now it would be very much difficult to take a plea that if in the 2B, if the invoice is not shown, then it would be very difficult to take the credit. This is what my view is that. Now you cannot challenge that, chalo, le leta hu in this condition, I will satisfy at a later date. Because now it's, AA is very much clear in this line with section 37 earlier.
Okay, got it. And then Ashit bhai, in that regard, if that being the case, how will you correlate with 16.4 then?
Chalo. Now let's come to section 16.4, right? Second issue. So now let us read section 64. In my view, the section 16.4 says that it takes about the input tax credit, and it says that a registered person has to take the credit of all the invoices till the next till the September of the next financial year. Now in this case, ABC AZ has rightly claimed the credit in the return, right? Only the other person who has not filed the return, then I have the time to reverse the credit till 30th September of the next month. Now, suppose unfortunately that person has not filed the return till that point of time. Then the question will come up, should I reverse it? In my view, we should not reverse it still, because we have to wait till the time the notice comes. Why? The only reason is that that person, whenever files is at that point of time, it will come into my 2B and I can take the credit. I cannot forget my right. Because I have the tax invoice, that I have everything, though the condition at the subsequent date which has to be fulfilled, it is not fulfilled at that point of time, then at that point of time I will see after 2 years or 3 years that whether I should reverse it or not reverse it. But I should get sufficient time and opportunity to plead my case.
Okay.
Therefore, I will not reverse it.
Okay. So I think we'll take final views from the chairman and we'll move to the next point. But I think
yes, you can also share your views.
My view, I think, I gave my view that I would agree to that analogy which you have put, Panjan, that I will claim the credit and it subsequently it comes in my GST 2B before receiving any notice from the department. That would be sufficient compliance.
Otherwise, alternatively, what will happen, suppose after 2 years period of time, that person has filed the return and paid the tax.
Right.
Now what will government has got the tax 2 times.
Yeah, they'll be doubly enriched in that.
Yes, case. Correct. So at that time, do I have to go and file the refund claim? It would be a difficult situation. Therefore, the suggestion would be that you do it, take the credit, put your claim, and go ahead.
I agree to that point. Yeah, Mr. Kishan has raised his hand. Sir, you have anything to add? Sir, you may speak, sir. Okay. We'll move to the next part of the question. Very interesting. I think this is that question which all of us have been juggling through in last at least 3-4 days. All of us have filed GSTR 3B for the month of December 2021. And the pertinent question which has come in front of all of us is whether this amended 16 rule 36 sub rule 4 read with this 16(2)(a), should I have to do this compliance and matching with GSTR 2B for the credits which I have claimed in my December GSTR 3B? Because all these returns I have filed after 1st of January 2022, and on 1st of January 2022 I had 16(2)(a) and I had 36 sub rule 4 also. And I will take an ancillary question related to this also in this particular point. Let's say I have claimed some credit in my November returns which I have filed before 31st of January 2021. And in that case, I had taken that benefit of 105% which was there in the earlier rule 36 sub rule 4. That credit will never come in my GSTR 2B now, because those suppliers to that extent of 5% will never file. They are not going to file the returns. Now, can department tell me now, because with January 2022, we have this rule 36(4) which says matching with 2A. So if up till next September 2022, those 5% people who do not file their GSTR 1, it is not reported in your GSTR 2B, all the credits which you have claimed up till 31st of December 2021, you have to reverse it because of this amendment. That is point number 1. And point number 2, let's say I have claimed certain credits up till December 2021. And now I am saying I forgot to claim that benefit of 5%. Can I claim that benefit now in my subsequent return? So 3 questions I am taking up. December 2021 return, do we have to look at the compliance? Credits already taken up till December 2021 in returns, additional 5% taken, can department ask me to reverse? And third point, credits taken up till the returns of December 2021, I forgot that 5%, can I claim the benefit? For the purpose of benefit of all the members, I will just put the perspective. What the question basically I'm asking to all of you is whether this amendment in 16(2)(a) and 36(4), is it a retrospective amendment or a prospective amendment? All of us know that it has been enacted with effect from 1st of January 2022. So in understanding, we know it is prospective in nature. Now, what is the impact of being prospective in nature? So we have certain judgments from Supreme Court in this regard. They say that whenever any substantive right is taken away through any amendment, it has to be always prospective. It can never be retrospective. However, if there is any procedural change which has been brought through any amendment, then that procedural change has an impact which has a retrospective impact, meaning thereby anything or any right or anything which has already accrued to me at a prior date, but I am taking certain procedural action in that regard in the current date. And if that procedural law has changed in the current date, then I have to follow the changed law which is applicable. So first point to deliberate upon whether these 2 amendments, they are basically substantive changes, or they are taking away my substantive right, or they are procedural changes. That is number 1. Number 2 is this judgment of Supreme Court in the Senvat credit regime in respect of Ostram Surya. Again, for the benefit of members, a little background. Basically, in this judgment, what had happened in the Modbet scheme was that there was a time limit which was brought in to claim the Senvat credit, and the time limit of 6 months was brought in the Modbet rules. Matter went up to the Supreme Court. The issue only was in respect of all those invoices which were dated prior to the date of amendment in the rule, and somebody who had not punched that credit in their returns, whether that amendment of six months time limit would be applicable to the credit which was going to be punched in the return subsequently. Supreme Court said because the rule has not been challenged and this rule is not taking away any vested right, meaning thereby all those people who have claimed their credits in the returns already before the amendment, their rights is not taken away. This amendment in the rule is not basically lapsing an input tax credit. It is only putting a timeline to the input tax credit, or sorry, the Senvat credit. So because it is only putting a timeline, it is absolutely proper. And in fact, Senvat credit which has accrued prior to the amendment but not claimed till date, they have to now abide by this 6 months time limit. And all those invoices which are prior to those 6 months, for that the Modbet credit cannot be claimed. Can we bring this analogy here and we say that because the credit for the month of December 2021 was not punched in GSTR 3B up till 1st of January 2022, that is why that has not become a vested right. And now for the returns for December, November, October, whatever filed after January 2022, they have to comply with this matching up with GSTR 2B. That is the question basically I'm putting in front of all of you in this background. Yes, anybody would like to bring his or her point, you are welcome. Yes, sir. Yes, Ms. Deepal.
Yeah, basically, what you say is that the rule has come from 1st January 22. Okay. And section 16AA has also come from 1st January 22. But 36(4) was already there prior to that also. And if we refer to the taking of the credit, that is 16(1), it takes us to rule 36(4).
Right.
So, as it is, you were eligible to take the credit as per 36(4) only. It's a separate question of entitlement relating to 16(2) that we will take separately. But as far as when you are taking the credit, 36(4) was already there earlier also. And as on 1st of January, whatever you are filing the returns of whatever period, so as on that date, whatever rules are existing, you need to follow them. So according to me, whatever returns you are filing from after 1st January 22, you have to follow 36(4) and you cannot get that 5% benefit also. You have to go as per 2.
Okay, and views on all the credits which have already been claimed up till December 21, can I claim that benefit of 105% in that regard?
Which return? 105% for what?
Let's say return for November, which I filed up till 20th of December 2021.
Right.
And I have claimed credit of 105 rupees in my GSTR 3B, whereas credit appearing in my 2A was 100 rupees.
Correct.
And that 5 rupees will never appear in my 2A or 2B ever.
So, if you will refer 36(4), can you just share 36(4) here?
Yeah, 1 minute.
Of that 105% wala also.
Yes. Yeah, you may see on your screen, left hand side.
This is 36(4).
Yes.
Yeah. So it says that input tax credit to be availed by a registered person in respect of invoices or debit notes, the details of which have not furnished or shall not exceed 5% of the eligible credit. So it very clearly says that you can claim 105%, no doubt about it. But that 5% also should be part of your 2A in future. I mean, if that credit is not reflecting in 2A at all, then you are not eligible for that 5% also.
Okay, got it. Got your point. Okay, okay. So madam has a view by saying that yes, it needs to be complied for the returns which are filed on or after 1st of January 2022. Anybody has a different view in case you would like to share it? Okay, I'll share my view for the benefit of, yes, Mr. Kishan.
Yeah. Yeah, my question was actually earlier also whether in this mismatch or reconciliation, how to take care of 16(2)(c).
Okay. Okay, so you're bringing a new angle.
That was my earlier question also, and now also in this mismatch, how to take care of 16(2)(c).
Okay. So you are asking a question, or you have some?
No. This is my not a question. I mean, in this entire scenario, that is getting unanswered for me. So I thought, get your view, please.
Okay, I'll share my view. I'll first go to Mr. Raj Kona. He has something to say.
Yeah.
Yes.
Hello.
Yes, sir.
Yeah, I just want to add one more angle to this. Is that you are talking about December month return that in January we are filing, therefore this is the issue.
Yes.
But then we may face issues where suppose the returns for the month of September, October, November, December are pending.
Yeah, we are talking about all those returns filed on or after 1st January 2000.
So according to me, if that view is taken that after this will apply for the previous period also, since we have not posted in the GST returns. So all my earlier period returns will get this condition will be like applicable from April onwards if I have not filed the returns. So according to me, this should apply from January only. But as it is worded and as we have discussed, it will be a challenge, and this we are facing every time. Means when this rule 36(4) was introduced, 120%, 110%, then 5%. So at all times, this point was is being debated. But according to me, I would go that this should apply from the January return only, because the intention is that we make it effective from January.
Okay, got your point, sir. Okay.
So that means, Raj, if October 21 return has been filed in January, so you will take the benefit of that 105%.
That is what up to that rule was applicable. 16.4 was there at that time.
Yeah, correct.
So therefore, I feel 105% should be available, or whatever the rule was at that time. But that is a little bit of debate will be there. Department will always say this way, but I feel the rule is made effective from 1st January. So for all the returns or periods before 1st January, the earlier rule should only apply. We cannot say that now for earlier period I will go back there. Even if you see QRMP scheme, if you look at QRMP scheme, they were supposed to file quarterly returns, but they have made the payment based on the ITC monthly basis. They have taken ITC based on whatever the formula is, and when it comes to filing 3B, they will be filing. They will be stuck in the situation that I have not followed that rule. So this will be there in quarterly return monthly payment scheme. So I'm just thinking aloud that. That is what.
Okay, got it. I'll request Mr. Nihar also to share his view quickly. Okay. Gaurav, you have something to add?
Yes. So can we take the view that the input tax credit of December was my right, and a vested right cannot be subsequently taken out by adding something on 1st Jan? So can that be a point? Although there's a slight issue there that the right to claim the ITC of December, I can claim it only on 1st Jan. That's the earliest I can claim it. So that would be the only issue, because we are saying that the ITC can be claimed only in the 3B, not in the books, unless we go into the Bharti Airtel case again. So can we take that vested right route to say that this is a prospective amendment, not a retrospective amendment?
Okay, got it.
Gaurav, so what will happen that we have to, whenever in the month of January, say 100 invoices are there. So we have to identify from that 100 invoice. Suppose if one invoice is of 2019, 1st January, when 20% restriction cap was there. So first we have to calculate whether 20% वाला कोई invoice है वो date का, तो उसको 20% apply होगा. Then 10%, 5% and 0%. Okay. So then is it the real manner in which it has been, we have to do it? To my mind, no, it's not like that. If you see the circular which has been given, circular number 123, how you restriction on availment of input tax credit, wherein it says that this is the only facility which has been granted, 20%, 10%, 5%, right? This doesn't become your right. It says that whatever is reflected in your 2B, that is your right. The government says that over and above that right, we are giving you this facility so that your credit will not be hampered. So it appears to me that no, from 1st January 2022, any return which has been filed, whatever period it may contain, invoice which is containing in that period, everything has to be calculated or determined from whatever law exists from 1st January 2022. Otherwise, there would be a lot of mess. How you will do that? I don't know, but this is just that I should share with you.
Okay. Only a slight view on this point, Ashit bhai, for the benefit of members. Only thing which is, when this 36.4 came in, government came out with a circular, I think on 12th or 13th of October, if I'm not wrong. I don't remember the exact date.
11th November.
11 November, correct, sir. In this
November.
question was specifically asked
Correct.
that this 36.4 shall be applicable in respect of credit for previous months or for this. And they clearly mentioned invoices on or after 9th of October 2019, this 36.4 shall be applicable. That's what they said in the circular.
Correct.
Maybe we can take a reference from there and say that this amendment in 36.4, it is there, it is applicable for the invoices which have been issued on or after January 2022. Plus also when we look at the entitlement and all those things, basically we are punching the details for a credit of a tax period in my GST return subsequently. And because it is a substantive amendment which has taken place, we have Supreme Court judgment which says it cannot have a prospective effect. So maybe in that light, one may take a view by saying that the credits in respect of invoices on or after January 2022, one can basically apply this matching. But yes, I agree that probably it needs to be challenged in the courts. One question which was raised by Mr. Dule, if I'm not wrong, he said, what is the reference of now role of 16(2)(c) in all of these cases? I think that's a very important point, because all of us have been arguing, how am I supposed to basically comply with 16(2)(c)? Probably the answer to that lies in the next question which we have, that is where government has said now they are going to recover the amount of tax which you have shown in GSTR1 and not reported in GSTR3B, and they're going to directly recover it without giving any show cause notice to the supplier. That means what government is saying, it is a self-assessed tax which supplier has declared. Now the responsibility is on us to basically recover it. In case we are unable to fail to recover it, then only will come to the recipient. So in my understanding, they cannot come back to the recipient directly to pay the tax, but they have to demonstrate that they went to the supplier was not traceable, or supplier was unable to pay, and now they want me to basically comply with 16(2)(c) as an anti-abuse provision. So that's my understanding in this regard. We will quickly go to the next point.
Yash, I just had one point to add over here.
Yes.
Just a thought that, see, the aspect where one says that, my credit gets claimed only when I'm filing the 3B, comes from section 49 and then the rule 86, which talks about the electronic credit ledger, etc. So over there, even rule 85, which is talking about the electronic liability register, is more or less worded in a similar fashion.
Correct.
So if I were to say that there's a liability which I for the month of say October 21, which I have not, for which the return is not filed, and therefore I may file it in say Jan or Feb. Would I say that my liability gets debited to the electronic liability ledger when I file my return, and therefore my liability should accrue from the date when it gets debited to the liability ledger? The answer is no, right? The liability gets accrued the moment I've supplied, made us outward supply. So with that similar logic, I would say that even the input tax credit gets accrued to me, or my claim by virtue of section 16, etc., gets accrued to me when I've actually undertaken the transaction in that very month, probably. And therefore, that logic that only when it gets credited to my credit ledger, only then I would be entitled to that credit, and therefore, this amendment would be applicable to me, may not really. So I'm just trying to draw that reference from the electronic liability register provisions in Rule 85 and Rule 86, and just try to say that if my liability also gets accrued on the in that very specific month when I've done the supply, then my ITC should also get accrued to me in that very month, and therefore this amendment would not apply for the December or any previous month's return which is filed say after 1st Jan 22.
Point taken, sir. Point taken. I think it can be an alternate argument which all of us would probably take.
Because even if the department is going to ask me for the interest, they're not going to ask me from the date my liability register is going to get debited. They're going to ask me, say, probably from the date when I made the supply, and then probably additional 20 days for that month's due date, right? So maybe similar argument could be taken up for ITC.
Only differentiating point under section 39, it is quite clear that my liability to pay tax actually arises on the day on which the due date of filing my return under section 39. So that is taken care by section 39 only. But point taken, sir. We'll go to the next point, last part of this first question, because it was a lengthy question. That's why we've taken this much amount of time. Now this matching which needs to be done, irrespective it needs to be done before, after, for December, January, whatever, on basically what needs to be matched, that is also quite interesting. So when you read 16(2)AA and 36(4), it talks about matching of invoices and debit notes. Now, in this regard, probably two things which clearly goes out in my understanding, and I would request all of you to basically give a counter to this, at least in respect of import of goods, that is the tax we pay, customs duty in form of IGST, which we pay through bill of entries, and ITC in respect of ISD invoices. At least these are those two documents in respect of which I need not match them with my GSTR 2B, though they may appear in my GSTR 2B in a specific table, specifically this ITC in respect of bill of entries, it would appear. It will show a mismatch also, but still in respect of this mismatch, this matching need not be done. So on at least on these two, because these are the simpler ones in my understanding, I have this view that matching need not be done. Then I would request all of you to also pinpoint when you would basically deliberate upon what would happen to those supplies in which as a recipient I am liable to pay tax under reverse charge, but my supplier is registered, and because the supplier is registered, he is required to show those details in his statement of output supplies in GSTR1. If he fails to do that, but I will pay tax under reverse charge, am I not entitled to claim the credit because of this now amendment which has happened in 16(2)(a) and 36(4)? That is number one. And number two, if that supplier, let's say normal supplier, puts in a credit note in which he reverses his liability in GSTR1 and appears in negative in my GSTR2, does it make it mandatory for me to actually reverse the input tax credit just because supplier has punched the credit note? I'm not going to any other condition, but just because he has punched the credit note in his GSTR1 and appearing in negative in my 2A, am I required to reverse the credit? And all these four things quickly, I would request views from all of you. In case you're not comfortable in speaking, you may also write in the chat box. So we will have multiple views from all the members. Yes, Mr. Ravi Rathi. Yes, sir. Mr. Rathi. Okay, Gaurav, in case you want to start first.
Yeah, Yash. I'll go to the specific point of import of goods. I agree with you. Section 16(2)(a) very clearly we can take a stand. It doesn't cover import of goods. However, if you look at Rule 67(3), Rule 67(3), which talks about the 2B, what all data will flow into 2B, talks about import of goods also.
Yes.
So, and practically we have already seen the department citing this rule and insisting that unless it's coming in 2B, we are not going to allow you. So the question is that does this rule 67(2)(b) get its power from any other section other than 16(2)(a)? That would be something which we need to check before we say that import ITC can be claimed even if it's not in 2B.
Okay, just small point, Gaurav. When we look at 36(4) and 16(2)(a), clearly uses the word such invoice or debit note. So if you read 16(2)(a), which talks about document, it's in possession of a tax invoice debit note issued by the supplier or any such tax paying document as may prescribe. So maybe bill of entry is covered in this any other tax paying document.
It is covered.
But 16(2)(a) only talks about invoice or debit note, and similar is the case with 36(4). So probably.
No, I agree, Yash. I'm talking about the Rule 61, Rule 62, 7(3).
So you're saying just because it is mentioned that it would appear in 2B, whether it can be a basis to match it. Okay.
Correct.
I would request first Mr. Rathi to maybe give his views, and then we'll go to Dipali ji.
Yeah.
Mr. Rathi.
The earlier part. Hello.
Yes, sir.
Yeah, I was on the earlier section where I wanted to make a comment with respect to 16(1). 16(1) talks about taking of credit and does not talks about availment or utilization of credit.
Okay.
And therefore, where the debate was there with respect to the invoices, I mean, if I have taken those credit vis-a-vis my books of accounts is concerned, before 31st of December, it may be an invoice for the month of for the year say 2019. And though I might have taken it in say December 2021, still since I have taken it into the books of account in December 21, the applicable provisions on December 21 will prevail, and accordingly 5% should go on in that case. So all returns for which the accounting is done prior to December 21, vis-a-vis whenever those are filed post December 21, I will be still governed by the older rules. That is what I do.
Got it. Got your point, sir. Okay. Mr. Arup, Then we'll go to Dipaliji.
Yeah, I just wanted to be Yash on the point of RCM actually. So since for the in case of RCN, the recipient is stepping into the shoes of the supplier. So it will hardly matter if the supplier who has made the registered supplier who has made this supply, say of GTA to me, if he has not shown it in his GSTR 1, still it will not prevent me from not paying the tax under reverse charge mechanism. And once I make the payment under reverse charge mechanism, I get the right to avail the credit. So I think in case of RCM from registered person, this provision would not affect, this amendment would not be effective.
Okay, okay. Dipaliji?
Yeah. First of all, can you go to 16.2?
Yeah. Yes.
Okay. A says that the person should be in possession of a tax invoice or debit note issued by a supplier registered under this act. Okay. So that supplier registered under this act is very important. And as far as imports are concerned, it is from a supplier who is not registered under this act. So the 16AA says that you have to refer to the invoice or debit note of clause A. So bill of entry or imports are not getting covered at all.
Got it.
Okay. So and 36(2) or 3 where this bill of entry condition is there. So on the basis of that, we can very well take the imports even if it is not reflecting in 2A, 2B.
Got it.
And at the same time, there is one recent advisory or instructions issued specifically for this imports, wherein it has been mentioned that if this IGST is not getting reflected just because there were issues in the beginning, it has clearly mentioned that if initially what had happened that in the bill of entry the GSTN of the supplier was not there. Okay, because of which it is now not getting auto-populated in the iState and in the GSTN portal. So there they have taken the stand that we have to, this Maharashtra, I think Maharashtra internal circular is issued and that only this is given, this point.
Got it. So basically, I got your point, madam. You are saying it is not applicable for imports. I think more or less all of us are on the same page on that regard.
Yeah. And about RCM, definitely this condition will be applicable for if you are taking RCM from registered persons.
Got it. It will be applicable. Okay. We'll go to Mazmuda Shreya Shardul. Your views? That will be probably the last few on this point, and then we'll go to Ashit Bhai and then we'll go to the next question. Yeah, Mazmuda Shreya Shardul, do you have anything to add in this point? Okay, I will just give my view before we go to Ashit Bhai. In my understanding, again, import definitely not covered. It's not an invoice or a debit note. ISD not covered. It is not an invoice issued by the supplier. Credit note, just because credit note is there in my 2B, that does not mean I have to reverse the credit. Other conditions of 34 needs to be satisfied also. Probably, basically, I am not going to make the payment. I am giving back those supplies. So just because it is coming in my 2B, I need not reverse it. RCM, I would disagree with what Arupji said, because he said that just when I pay the tax under reverse charge, I step in the shoes of a supplier, but that's not how 9.3 and 9.4 are worded. And in that case, I am the person liable to pay tax under reverse charge. That's the only point. So I would agree to what Dipaliji is saying. In case of reverse charge also, until government, in my view, government comes out with a circular in that regard, I would understand that for 2B matching also, it is going to be very important that all those suppliers also punch their details in GSTR 1 timely, correct details, and in my understanding, then only it will be, I will be eligible to claim credit in that regard. Ashit Bhai, your views on this?
No, yes, I totally concur with your view. Definitely, there is absolutely that as far as import is concerned, ITC on ISP is concerned, and credit note, it doesn't require to appear in 2B. As far as the RCM of registered person, yes, one has to check in the 2B. If it is not reflected, then it is very difficult to claim the ITC. And this will create a major practical problem in respect of our transport section.
Right.
Because generally when we see a transporter, we see reverse charge mein bhar diya. I think some participant said, I am eligible for credit. Now that transporter, some of the transporter may be registered, some transporter may not be registered. So now we have to distinguish between two. If unregistered, then Yes, totally RCM per tax per year, we can get the credit in respect of those who are registered. It will be difficult to pick a ticket. So one more task for checking has been increased for all of us after this 16 double N. Yeah, that's it.
Got it. So with this, we go to next case study. I think, okay, last point, very interesting in this, which is left. Now, all those people who are claiming refund under unutilized input tax credit, LUT exports and refund of unutilized credit in case of inverted duty structure.
Yes, I think Nitin Gupta has written something. Import no limit.
Yeah, he's saying that in case of import, matching is not required.
No limit means nothing is required. Okay.
Matching not required. Okay, so all those who are claiming refund, now whether matching needs to be done as per GSTR 2B or 2A, I will request all of you to write in the chat box so that we'll be able to save time. I'm just asking the view whether the matching needs to be done for the purpose of claiming refund.
Let's take a poll.
As per 2A or 2B.
Yes, fastest finger first.
Yeah.
2A or 2B.
Yeah.
Or both.
Mr. Nagpal is saying 2B. We do not have any other answer up till now. Why am I asking? Okay, Mr. Madhunda Shreya Shardul is saying 2A. Okay, Mr. Ansari is also saying 2A. Okay. So yeah, majority is saying, okay, Dipali ji is saying depends when you are applying refund. Okay, so if you are applying refund for a subsequent period, then probably what she is saying is 2B.
Yeah, so let's say it is from after 1st January 22.
Yeah. So only point which I am bringing here is that in respect of refund, there is this circular number 135. They have this para 5.2, which is quite categorically saying that matching has to be done as per GSTR 2A. Interestingly, 60 sub-rule 1 still has GSTR 2A in existence. Some of us said that GSTR 2A has gone away. Some technical lapse had happened at the GSTN level, and interestingly, on 1st and 2nd of January, and we thought now GSTR 2A is gone. It's a dead chapter, but that's not the case. And I understand till the time the circular is in place, that matching needs to be done as per GSTR 2A, and it will in fact only benefit us because you will always have credit at a higher amount as per GSTR 2A for that particular month or for the previous month. That's what the circular says. So until the circular is not amended, I understand that whenever we're claiming a refund, it is going to be an additional task. But at least our refunds, I understand they are going to be safeguarded by this particular point.
Yes, yes, but if you are not going to take that credit in your 3B, if in your 3B you are going to follow as per 2B, then while claiming refund, how will you follow 2A?
No, so I am saying whatever credit is there in my 3B, I will match it with my corresponding GSTR 2A, but not with 2B. That's what I'm saying.
Really? When you are filing 3B, obviously you are going to match with 2B and then only you are going to file, right?
Yes, she is saying that after 1st January 22, you have to mandatorily follow 2B.
Right.
Right. So then after you are filing the refund claim application, so you don't have choice. You have to see the 2B only because then only it will match. Then how can you go for 2A?
Okay, so if that you're saying, so madam, what happens is when in the standard document list till the time they do not bring a change, it says that you have to, that annexure B which you are filing, you have to write the corresponding in which particular GSTR 2A it is appearing. So let's see. Yeah, what officers follow, but if you are writing corresponding GSTR 2B, no doubt it is going to be an additional exercise because you have filed return with 2B. But for the refund claims, I am saying it is still going to be 2A, not 2B till the time the circular is amended. Okay. Now we go to next question. Again, that issue arising from the GST portal, very interesting thing which has come up. All of us know that there was this advisory which was issued by GST portal in respect of interest. They said that our GSTR 3B has a fault. That fault is you cannot bifurcate that whenever you're punching the outward supplies in 3.1A, you can't put in that it belongs to which particular tax period. Whether you're punching details for the previous tax periods also, if in case you're doing so, because the figure comes in a consolidated manner, so it is quite difficult that people are not able to identify the correct interest, and that is why they're not paying the interest. So as a facility measure, what they're saying is voluntarily, if in case you want to pay the interest, once you go to the payment tab, then GSTN will basically open a tab where you will be able to punch the periods of the tax liability which you have punched in the current GSTR 3B. So let's say I'm filing GSTR 3B for the month of October 21 as per the example given in the advisory. And in that October 21, I have punched the liability for the prior period. So I may punch what is the amount of liability we have put in for the prior periods. the tax there, and then system will auto calculate the interest, and then I may proceed and go ahead, pay that interest along with my GSTR 3B. Then they have also given the formula in that advisory. Mind you, all of this is neither a circular, neither notification, nothing. It's an advisory on the GSTN portal, where they've given a formula for calculation of interest, and they're saying tax liability of the previous periods, which I punched in my current return into a number of days since the due date, and as basically on per annum basis, and rate of interest 18%, I have to pay the interest. That's what the advisory says. Now, what is the section saying? All of us know that there was this proviso which was inserted with a retrospective effect in 50 subsection 1, where 50 subsection 1 said that wherever there is a failure to pay tax to the government within a prescribed period, then I am required to pay interest, and rate of that interest shall not be more than 18%. But the proviso said that wherever there is a tax payable in respect of supplies made during a tax period, and the whole question which I am basically raising is dependent on this and it says tax payable in respect of supplies made during a tax period and declared in the return for said tax period. If that tax has been paid through cash ledger, so whatever tax has been paid through cash ledger, only interest has to be paid on that amount, subject to that no notice or no proceedings have been initiated under 73 or 74. It's a proviso carving out 50 subsection 1. That's what all of us understand. Now, what is the question? So there is this company who was supposed to basically pay a tax of 1.8 CR for a particular month. They only had a credit balance of 1.35 CR. They did not have the balance to, did not have the cash to pay the balance liability. Now they went to the consultant and they asked the consultant what needs to be done. I do not have the cash. Consultant suggested two things. One, he said, you delay your filing of November 2021 return. Let's say it's a case of November. So you delay the filing of return and file the return whenever you have the cash amount. Second, the consultant said, do not delay the filing of return. What you do is file your GSTR 3B with nil amount. Do not show the sale of 10 crore rupees. Do not show the amount of this 1.8 CR of outward liability. And you show that subsequently in the month of January or December 2021, whenever you will have the cash to pay that particular amount. So the net effect of this is that for November 21, I do not have cash. I may have it when my due date of filing of return for the month of December will come in. And the consultant saying either of the two, either delay the filing of return for November or you show all these liabilities in the subsequent return. Now, all of us know when we are going to delay the return for the November, it is quite clear that section for interest is clear. It only says you have to pay interest on the net cash liability. However, when I'm going to pay this outward liability and I'm not showing in my November return, but I'm showing it completely in my subsequent return for the month of December, as per the GST portal, once I will punch the details of 1.8 CR, that figures which I'm punching in my 3.1A, moment I will punch 1.8 CR, in spite of having the credit balance of 1.35 CR, still it will ask me to pay interest on the gross amount of 1.8 CR. Okay. Now the question is this understanding which has been given by the advisory is correct, or in the light of this proviso, or is it the case that even if, is there a difference when I am delaying my return for a particular month, then I'm only paying interest on the cash portion, whereas I am not showing the outward liability in that particular return and I'm showing the complete outward liability in the subsequent return, then I have to pay the interest on the gross amount. Conditions remain same. I have balance of 1.35 CR in my credit ledger. Question, why is this question arising? Am I governed by the proviso in these cases, or can I take benefit of proviso in both cases? Or is it a case that in both the cases, I don't have to look at the proviso because there is no failure to pay tax to the government to the extent of 1.35 CR? This is the question basically which I'm asking all of you. I would request all of you to give your views quickly. Anybody who has raised hand, I will first go to Mr. Arup. Yes, Arup.
Yeah, yes, here what I feel is the word in the proviso, the word said is very important for the set period. So if I am not furnishing the details of supply that I've made in a particular period and I'm deferring it to a next tax period, so essentially the interest will be attracted on the ECL amount also, on the credit ledger amount also that I'm utilizing.
Okay, so you're saying it is on the gross amount.
Yeah, on the gross amount.
Because you're saying it uses the word set tax period. So you're
for the set period, yes.
Okay, yes, Mr. Kishan.
No, thanks.
Okay. Anybody has anything else to bring out in this? Okay, so Mr. Arup has brought a point by saying, see, when you look at the proviso, this proviso uses the word tax payable in respect of supplies made during a tax period and declared in the returns for that particular tax period. Okay, just a different perspective again, if I would like to bring before all of you is, in my understanding, in both the cases, even if I'm delaying my return or I'm basically punching the liability in my subsequent returns, it makes no difference, because I in fact don't have to go to the proviso at all. According to me, this case, at least to the extent of 1.35 CR, to the extent of credit which was available with me, I am in fact out of 50 subsection 1, because there is no failure of making payment of tax to the government within the prescribed period or any part thereof. And why am I saying so? So basically, all of us know that we had this judgment of Madras High Court in case of Refresh Industries, and exact same question was asked in this case. The question was that whether in cases where credit due to the assessee, payment by way of adjustment may still be termed as belated or delayed. And in this case, Madras High Court specifically said that delayed basically it connotes to deprival, and wherever state already has input tax credit available with them in the electronic credit ledger, that means tax has already been paid to them. So there is no failure in that particular regard, and hence in those cases, even if in those cases if interest is being asked on the credit portion also, then that would amount to enriching the government twice with that tax, which would not be proper, and hence interest would not be applicable in those cases. Plus, we have old Aisha Motor judgment of Honorable Supreme Court also. There, Supreme Court made an observation in respect of Senvad credit by saying that whatever credit, basically amount of tax which we are paying as credit, is as good as tax paid to the government. And once I have paid tax to the government and I have claimed a credit of it, that claiming of credit is tax paid, and then that is why to that extent interest should not be applicable in all these cases. So what I'm trying, basically my understanding is that the advisory given by GST, in my humble understanding, is not proper. I need not go to the proviso, need not look at need not look at set tax period. To the extent of credit which is available with me, I am outside 50 subsection 1. I need not look at the benefit which is given by the proviso in that particular regard. So when is proviso applicable? Proviso is only applicable in those cases where I'm delaying my return and I did not have credit balance already. So when I'm putting my credit in that particular return, only for those cases, they're giving a benefit to the extent of that particular credit. That is my understanding in this regard. Ashit bhai, you have anything to add or supplement or any different view in this?
So this is a draconian provision, I would say. Now here the advisory is trying to rope into something which is not in line with the earlier the dispute which was there in the interest, whether interest should be in gross or net.
Right.
After a reflex industry and lot of dispute which has been going on, they have to amend it and give it clarificatory. They know the interest has to be on the net portion after whatever credit which is available. Now again the same thing has started by looking to the proviso. So if we read the proviso, yes, I agree that interest has to be on the gross amount, not on the net amount. That is in our case it could be on 1.80 crore rupees. But at the same time, then the credit which is there 1.35, that will go. Basically, interest is what? Interest is the compensatory the thing which is to be given to the government. In this case, what is the compensation? The compensation is 1.80 minus 1.35. Whatever you are having on that, again you want an interest. So that is not the correct way of looking at into it. And again, I think it has to be challenged. But practically, if you will see that whenever you on the portal, if you will put any amount, interest will be automatic and that liability will be there. So the next question will come out that suppose on the portal, we all are living in the portal law, right? Now in portal law, whenever you put an amount 1.80 crore rupees, automatic interest will be there. Now the question is whether can I edit that amount and pay my interest? I think that is available. I have to check it out. I'm not very
sure. That is available.
That is editable, right? So one has to edit that amount, and that's why that's probably the reason they have made it editable. Otherwise, they are very smart enough. They will say, no, this is our interest. Unless and until you pay it, we will not allow you. So yeah, if you shout, then you will get the benefit. If you don't shout, you have to pay the whatever has been there on the system. So I think a very good chance to again a new round of litigation will start. That how to pay the interest on the gross thing. This is what I
and in fact, what Ashit sir said, I'll take the next question, which is actually the most interesting question. So now all of us know either of the two things that assessee will do. Either he will not report in GSTR1, or he will report in GSTR1 and then probably subsequently he will file that subsequently in GSTR3B. So there is
just a second, just one more thing which I forgotten to add. Now here in your question it says GSTR3B for the month of November 21.
Yeah.
Now you say that in the first option that you file it by making, though you doesn't have to make the payment. But if we follow the portal law, I would say you cannot file the return.
Yeah, no. So he will not file all subsequent returns till the time we do not have the cash.
Exactly. So now what will happen then in that situation? I think that has not been taken into consideration. Then what will happen? Automatically everything, the thing gross as well as the net will go into the next thing also. Then the problem will not arise.
Right.
So indirectly this shows that yes, you can file the return without making payment of tax.
Correct.
This advisory which has been given that indirectly says that we are allowing you to file the return without making payment of tax. Now let's see how they are reacting.
Right.
Yeah, fine.
In fact, what you said is actually it was discussed in the GST Council meeting also, and they agreed that they never had the intention that returns to be filed only when payment of taxes happened.
Correct.
Filing of return and filing of a valid return, they are both separate things.
Correct. And law is very much clear. It says that you can file the return, but this portal that restricts.
Yeah. Correct. Now let's say, interestingly, that person shows in GSTR1 his outward tax liability. He does not shows in GSTR3B, or there is a gap. Okay. Now, whether they can recover the interest, I'm not talking about the tax portion. I'm talking about the interest, whether they can recover the interest. If they can recover the interest, can they recover the interest without issuing a show cause notice? Or if they want to issue a show cause notice, which is a section, why am I bringing this? 7512 says, notwithstanding anything contained in section 73 or 74, where any amount of self-assessed tax in accordance with return furnished in 39 remains unpaid, either wholly or partly, or any amount interest payable on such tax remains unpaid. So it also says any amount of interest payable on such tax remains unpaid. The same shall be recovered under the provision of section 79. So 7512 clearly says that if your self-assessed tax remains unpaid, then in that case, whatever interest is also payable on it, it can be recovered under section 79, and they will not refer to 73 and 74 in that regard. Interestingly, there was a show cause notice issued to an assessee in Gujarat for only recovery of interest under section 73. Matter was challenged in the Gujarat High Court. Gujarat High Court, in case of this Rajkamal Builders Infrastructure Private Limited, held that show cause notice only for the recovery of interest cannot be issued under section 73 or 74, because show cause for 73 and 74 has to be for applicable tax along with interest and penalty. That's what Gujarat High Court said. But Gujarat High Court did not stop here, and they went a step ahead. They said for recovery of interest, there can be directly DRC 07. And that's what this High Court judgment says. They said, no DRC1, we totally agree, no show cause under 73, 74. But when they read Rule 142, they said after reading 142, we are quite clear that there has to be notice for recovery of interest, and that notice for recovery of interest has to be under DRC 07. So what High Court has suggested is that for recovery of interest on the self-assessed tax, there can be direct DRC 07. Now, whether and in the understanding of the group member, is that proper? If the DRC 07 can be issued directly, if not, can there be a DRC 01 along with the show cause under 73, 74? If that is also not possible, how is government basically going to recover this interest if I don't pay it? That's the question which I'm raising. Yes, anybody would like to start? Mr. Madhavi Hemant Rane, in case you would like to start, sir, first. Sorry, Madhavi Hemant Rane. I'm sorry, I misspelled your name.
Just give me 1 second.
Yes, sure, no problem, sir. Okay, yes, Sarup bhai.
Ideally, I think the mode that should be followed is that they have to issue a DRC 01A first.
Okay.
And maybe wherein they can highlight the fact that I have shown it in my GSTR 1, but I have not paid the interest on the same.
Okay.
And if the answer to that is not satisfactory, then maybe they can go with DRC 01 and then finally go with the DRC 07 with the order. So in my view, they cannot directly go into the recovery procedure under section 79.
Okay.
For the interest.
Okay. And you're saying in spite of this 7512 which we have, which clearly says that they can recover the interest on self-assessed tax under section 79?
Yeah, no, but here I would like to differ with one thing only, that self-assessed tax would mean that I have shown it in GSTR 1 and I have also shown it in GSTR 3B, but I have not paid the interest.
Okay, okay. Right.
So because in one of my practical cases, we had shown a wrong GSTR 1 and accordingly we had not paid the tax on that because there was the auto population problem and all. So in that case, I would not consider that to be self-assessed because in the 3B, I have shown the correct figure.
Okay, okay. Yes. Madhvi, Hemant Rane, you would like to add something? Okay. Dipali ji, you would like to add something?
Nowadays, we all are receiving notices, show cause notices for interest payable. And it does not have any form name mentioned. It's just a show cause notice. So, I'm just asking you, then in your opinion, is it a valid notice and should we comply to it?
Absolutely. Any notice which does not have any reference of a section or the manner which is
specific. It has the reference of section 50, but it just says it's a show cause notice for interest under section 50.
But section 50 does not empower a proper officer to issue a show cause under section 50.
Precisely, so that is what I am asking you. So then how to reply to such notices? Then what you say is correct, that for interest you can directly start the recovery proceedings. As per section 7512, but the fact still remains that they are issuing the show cause notices and they expect a reply also, and after that only they are issuing this DRC 07.
Okay, so before we proceed, Mr. Majmundar has basically referred to the instruction of 7 January. That was basically part of the next question, but that reference is respect of the difference in self-assessed tax and how that can be recovered. So maybe one way which Mr. Majmundar is saying is the proper way, that clearly under 73-74 show cause for interest cannot be issued. At max, what they can do is, as per the SOP which has been issued by the CBIC on 7 January, they can give a letter by saying that they want to recover the interest on the self-assessed tax. They would give us an opportunity of being heard. We can reply to it, and in case he agrees, he would agree to the amount which we are saying. Or if he does not agree, then he can go ahead and go into the recovery proceedings. Only point which I would like to bring before all the participants is, we have this Gujarat High Court judgment of Rajkamal Builders, which directly talks about DRC 07. But in my understanding, DRC 07 can be only issued only when we have the procedure of DRC 01 and all that which has been followed. So clearly that probably would not be the right way of looking at it. You come to again this Madras High Court judgment Reflex Industries, very interesting paragraph 29, which clearly says that whenever there is a self-assessed tax paid delayed, interest is automatic, there is no doubt. But the quantification of interest is something which cannot be automatic. If there is an arithmetical difference in the understanding of the proper officer and the assessee, in that case, opportunity of being heard needs to be given to the assessee. So correct way probably would be in this case that as per the SOP, they go forward, come out, take our reply, and then accordingly proceed. The interesting point again would be, if let's say still we do not agree to whatever the officer is saying, can we go and file an appeal in this regard? Whether that order is going to be an appealable order. Again, I understand whatever that communication will come from the officer may be an appealable order, but you will not be able to file the appeal on the online mode. So that is going to be a practical difficulty which one would face, but still that is something which you can take up before the appellate authority in this regard. Ashit bhai, you have anything to add in this regard?
No, I think what you say is correct, but I think nowadays only a letter is issued. We cannot term it as a show cause notice or DR0C01 or 07. They are just mainly intimating an SSC taxpayer that you pay this amount, because it is a self-assessed thing. And I have seen one letter which says that 2 rupees amount of interest is pending and it has been sent to us. So such kind of things will be there, but yes, if it is a self-assessed, then we don't there is no need for issuance of show cause notice, that's for sure.
Correct. Okay.
Yash, I would say that there has been DRC 07 in one of our clients' case for 2 periods, 1819 and 1920, only for recovery of interest.
Okay. But
So,
madam, yeah.
if we dispute this interest, then can we file appeal against it because this order is there online?
Now, again, very important point is DRC 07 is not the order. DRC 07 is summary of the order. There has to be an order in that DRC 07 against which one has to file an appeal. Now, again, as Ashit bhai rightly said, portal made law is different. Portal does not care whether there is order or not. Portal cares whether DRC 07 is there. You put number of DRC 07, it will auto-populate and will allow you to file the appeal.
Yes, correct.
So, yes, it is in our favor. If you have DRC 07, file an appeal, you need not give any pre-deposit. But again, theoretically speaking, that's probably not the correct way. One would need an order from the officer against which.
But what will happen that it will not be an order, na? We will not accept it first of all.
Yeah.
Who will hurt you? For the self-assessed demand, who will hurt you? The affiliate authority will just straight.
Ashit bhai, we are talking about interest only, not tax.
Correct, but the interest is auto-calculated. Suppose if there is a difference in quantification, then yes. Otherwise, who will hear you?
No, only on the quantification I am saying.
Yeah.
Our example.
Correct.
Yeah. Okay. Now we quickly go to question number 3. Again, the issue in question number 3 is that we have this amendment in section 75, subsection 12, which we just read, but the amendment is there is an insertion of the explanation, and the explanation says that for the purpose of this subsection, the self-assessed tax shall include tax payable in respect of details of outward supplies furnished in section 37, but not included in return furnished under section 39. And I think the genesis of this issue, basically, it was decided back in 2020 by the MP High Court in case of this Kabir Realty Private Limited. A similar issue came before this amendment only. Somebody had declared details in GSTR 1, but have not declared in GSTR 3B. Department went ahead, recovered the amount without issuing a show cause notice. Assessee went in a writ petition before the Honorable High Court, and the Honorable High Court said it's a clear-cut case of self-assessed tax not declared but not paid to the government, and hence directly recovery proceedings can take place. Now, our case is, let's say somebody who had made an exempt supply. By mistake, they have punched the details in B2C supplies along with tax. They were not aware that this GSTR 1 can be amended in respect of B2C. They did not know the mechanism to amend the B2C details in GSTR 1. So they forgot to amend it. And obviously, because it was an exempt supply, they did not declare that in GSTR 3B in the taxable supplies. So obviously, there was a difference in 1 and 3B. Department came and they said, we want to make the recovery without issuing a show cause notice. That's number 1. The number 2 is again the SOP which has been issued, which Mr. I think Majbundar also referred to, that they cannot come and directly recover the amount. But what they have to do is basically give a notice, may not be under a specific form or a manner, but only giving an opportunity of being heard to the person that they want to basically recover this particular amount and an explanation from that particular assessee. Okay. Now, my question is, first of all, there is an exempt supply which has been wrongly declared in my GSTR 1 as taxable. Am I mandatorily required to pay that amount in my GSTR 3B? So let's say the notice from the department has come. Am I mandatorily required to pay that first and then make a subsequent adjustment? Or is it so that I can decide not to pay it and give an explanation? That is question number 1. Question number 2, let's say I do not agree with what the department is saying. Let's say the officer is adamant and he says still he wants to recover it, irrespective it is an exempt supply. The officer says, first of all, I should pay the tax to the government and then I should file a refund in that particular case. Then the question will be, if I want to challenge it, how am I supposed to challenge that particular case? Almost similar to what happened in case of interest. There is going to be no DRC 07 in that particular regard. So is the writ petition only option available with me, or can I look for an alternate in this particular case? These are 2 simple questions which I'm asking with this amendment which has taken place in 75 subsection 12 by way of an explanation. Anybody?
Yes, just a sec. I think the previous case study last point, I think it has been missed out, or you have discussed.
What was the last point, sir? Sorry.
It was the cancellation of registration.
Okay, yeah.
Blocking.
Okay, so yeah, so the last question was only the strategy in terms of, I do not have money to pay. And I can see that there are three possibilities. If I don't file my GSTR 3B if I don't file my GSTR 1, if I don't file my GSTR 3B of previous month, system will not allow me to file my GSTR 1 for next period. If I don't file my GSTR 1, my recipient will not get credit. Let's say I file my GSTR 1 and 3B for differential figures, then in that case, Rule 21 will tell me that my registration can be cancelled if there is a difference. And if I basically for 2 tax periods, I don't file my returns, my e-way blocking can take place. So in all those cases, all those people who have deficiency of cash, what they should do? Should they delay in filing of returns, or should they file returns with mismatched details? That was basically the question which I wanted to ask. Ashit bhai, you would like to advise anything in this regard?
Everything, only thing is one has to comply, otherwise life would be very miserable. That's the only thing. Otherwise,
only one,
everything,
one possibility which I say is that you delay filing of GSTR 3B up till the due date of filing of GSTR 1 for the next tax period. Ensure you file your GSTR 3B before the due date of filing of next GSTR 1. If up till then you still do not have the amount, file GSTR 3B with mismatched figures. File your next GSTR 1, and then again take money from somebody, take a loan, and then file your next GSTR 3B on time. Probably that can be the only way.
So only you can get the saving period of 2 months, not more than that.
Correct.
So, or 60 days, whatever you wanted to do the jugglery, you can do it, but not later than that.
Not later than that. Correct. Okay. So quickly to case study number 3. Anybody would like to bring out anything in this regard?
Sorry to interrupt. Can we do something that we do not show the sales at all, neither in GSTR 1 nor in 3B? Okay, and then go for and ask for installments of payment.
So that's a very good question, madam. So what madam is saying is that we have section 80. In fact, that was part of my next question, but we can take it here. So madam is saying there is section 80 which says that one can file an application before the commissioner for asking for giving an installment, maximum 24 installments. The only exception to that is that in respect of any amount which is due as self-assessed in any return, for that I cannot ask for an installment. Now madam has said is till the time I am not punching the details in my return, it does not become a self-assessed tax, and once it is not a self-assessed tax, I can go before the commissioner and ask for the installment. Probably, in my view, yes, that can be done. But practically, what I understand, commissioner will clearly say no in this regard. Why he will say this is not that amount which is coming out of any order or anything of that sort. This is something for which you should have actually first filed the return. So what you're doing is just to come out of it, you're not filing the return here. And hence, maybe it will depend on case-to-case basis. But practically, what I understand, in majority cases, the answer would be negative in this case.
Further, it would be hold good only in respect of B2C transaction. B2B, right. So apart from government, that vendors will also come to your doorstep.
Right, correct. Okay. So very quickly, anybody would like to bring out that where there is a difference in my 1.3b, what can I do? Should I, and I do not agree with what department is doing. Is the writ court only option available, or is there something which I can tell the officer to give any specific document in this regard against which I can file an appeal? Mr. Kishan has raised his point in case he would like to say something. Or Mr. Madhvi Hemant Rane, you would like to say something? Madhvi Hemant Rane or Kishan or any other person who would like to bring any point here? Okay, because it's a smaller question, I would just give my view. According to me, the only option available in this case is a writ court. I don't see any appealable order in this case. Though when you look at section 121, which talks about non-appealable decisions and orders, you don't find any mention of any of the communication coming from the department where they want to recover any tax amount from me. And that recovery of tax amount which they want to do, if let's say they decide that this is the amount of tax they want to recover from me under section 79, I don't see that listed under section 121 in the list of all those orders which are non-appealable orders. So again, the theoretical view is, why I'm saying theoretical, because it would not gel with the with GST IN, because GST IN would not allow you to file the appeal on the portal. But practically speaking, appeal can be filed against that communication coming from the proper officer where he says you want to recover the amount of tax under section 79. I may not agree with the quantification, but I practically, because I can't file the appeal before the first appellate authority because there is no option available online. Only option I see is the writ court possible in this particular case. Clearly, section 80 benefit of installments also would not be available in this case. I cannot ask officer to or request the commissioner to basically give installments because this is a self-assessed tax and self-assessed tax is debarred under section 80 from this payment of installments. Ashit bhai, anything on this point?
No, I think you are right. Only one more issue which I feel will come up over here.
Yes.
Now, this is an explanation which has been inserted from January. Now, many of us return as being GSTR 1 and 3 may not be tallied of the previous year, 19, 20. Now, the department will come out with issues of communication that look, this is your difference 1 and 3B. Now, please pay the tax immediately. And that's it. Because this is an explanation which has been inserted, and everyone knows that explanation is the effect from the first of July 17. So now this kind of notices will flood it out, and then the question will come up whether we go to the court or to file a writ petition that whether the action of the government is correct or not. This is the challenging issue which I foresee that yes, it will come within the days.
I agree to what Ashit bhai is saying. I think one point which Mr. Majmundar has raised is, can we request the officer through letter to pass an order against which appeal can be filed? Again, we may request the officer, sir, but the problem is that officer without that DRC 1.7 and all those things, he will not be do anything on the portal. And the appellate authority these days says till the time appeal is not filed online, they will put that under a defect. So again, practically, there is going to be a challenge until unless you are able to pursue to the officer to issue a DRC 07. But I don't think in this case he will be duty bound to do so. Yeah, Mr.
Now again, the subjectivity will come up.
Yes.
That officer has to be satisfied, and then only he will give the understand that what you are trying to say. Otherwise, it could be a very difficult proposition.
Correct.
So
yes,
satisfaction is very much important now.
Totally agree, sir.
Yeah, so Yash, what I wanted to state is that interestingly, under GST, even decisions are also appealable.
Right.
Like which is not there in the erstwhile law. So this is one thing that we have taken with the local commissioner also, that this is kind of a decision that is taken by the proper officer. But the problem is that the portal is not allowing me to file an appeal against this decision, though the section 107 allows me to do so.
Right, sir. Absolutely.
So that is one thing that is there that needs to be taken care with the law, I think.
Right. Okay. We move on to next fourth question. I think that's a very interesting question. Some interesting analogies are coming out of this, at least in my mind. I would like to see how much validation we get from the group. So now all of us know there was this notification 17/2021 which came in, where in respect of all those people who are supplying restaurant services which are not located at specified premises and they're supplying it through e-commerce portals. Then in those cases, now under section 9 subsection 5, the tax shall be paid by the e-commerce portal, and all these restaurants, they would not be basically required to pay tax in that particular regard. Basically, we are talking about standalone restaurants or those restaurants which are not part of a hotel premises, which have a tariff of more than 7,500 rupees per day. And all those cases, if they are supplying through online portal like Swiggy, Zomato and all those, then in that case, these Swiggy, Zomato are basically going to pay the tax and these restaurants would not pay tax. Up till now, these restaurants were basically paying tax and Swiggy, Zomato was paying TCS in that particular regard. That's the amendment to notification 17/2021. Now, what is the question we have? Two questions which we have. Let's say there is a cloud kitchen there and we already have a circular of September 2021, which is all these cloud kitchens are basically, they are providing restaurant services. So there is no question whether they are supplying goods or not, they're giving restaurant services. It's a pure cloud kitchen, no sitting facility, nothing. So no physical outlet, supplying purely to Zomato or Swiggy. Now in this case, the first question is, because from 1st January 2022, this Swiggy, Zomato are going to pay the tax. Can this cloud kitchen say, I don't want to keep the registration. My total receipts are 1 crore rupees in a year, but I want to surrender my registration, which is there, because I am not the person liable to pay tax. That's question number one. The question number two is, if let's say it decides to keep the registration, or let's say we agree, no, it is still required to take the registration. Is it legally required to show the details of the supplies of this 1 crore made to Swiggy, Zomato after 1st January 2022 on in its GSTR 1 and GSTR 3B? Just for the reference, why am I basically raising this question? Because of section 9 subsection 1 read with 9 subsection 5. 9.1 says the tax needs to be paid by a taxable person. However, 9.5 clearly says the government may, on the recommendation of the council by notification, specify category of services, the tax on the intrastate supplies of which shall be paid by the electronic commerce operator if of services are supplied through it, and all the provisions of this act shall apply to such electronic commerce operator as if he is a supplier liable for paying the tax in relation to such supplies. So 9.5 is unlike reverse charge. It clearly makes those electronic commerce operators as suppliers liable for paying tax in respect of those supplies. And once they are the suppliers, basically, can these restaurants or this cloud kitchen say, I want to take benefit of section 29.1c? And what 29.1c says, that I may go and voluntarily opt for cancellation if the taxable person is no longer liable to be registered under section 22 or 24, or intends to opt out of the registration voluntarily made under subsection 3 of the section 25. And all of us know taxable person is registered, somebody who's registered or liable to be registered. So my first question to all of you, can all these cloud kitchens say, we don't want to keep the registration, we will only supply services as a cloud kitchen, and on this tax shall be paid by these electronic commerce operators? Any view in this regard? Yes, Mr. Arup.
See, one thing is that the cloud kitchen, they are, apart from the restaurant service, they are also providing this infrastructure to the different service providers. Okay, so from that point of view, maybe they need to keep their registration, in my view.
Okay.
Okay, because in some cases we are seeing that they are getting branding charges, okay, and some location charges and things like that, because internally they can do that. And apart from that, they are also providing the services of kitchen cutlery, and all those things are also there, like equipments and all. So for that, they will keep the registrations. But hypothetically saying that they keep with the registration, then the next question is very important, which you have raised, which is being raised by our clients also, that whether they need to show the supply in their return, whether outward supplies need to be shown in their returns or not. So to this, to my mind, what view I am taking is that yes, you show it as your exempt supply.
Okay. And I think your view is consistent with the view given in this circular by CBIC. That's what they are also saying.
Yes.
Okay, we'll come to that point. So Aruba is saying that no, they are required to keep the registration because the other supplies are there. Okay, Mr. Subramaniam, you have anything to add in this? Mr. Subramaniam?
Am I audible, sir?
Yes, sir.
Hello, sir. If you go through section 9.5, particularly the 9.5, so the e-commerce operator, he shall be deemed to be the supplier.
Right.
So not the hotel or restaurant is deemed to be a supplier. So therefore, my view is that I don't have any taxable supply at all. So therefore, it is not necessary for me, except in certain cases, if there is some other services or branding. Other than that, if there is no supply, only the supply related to restaurant, then in such situations, I rely on section 29C. No longer is required to no longer is required to have a registration. Therefore, I can apply for cancellation of registration.
Okay. So you basically, what we are getting is, if there are other supplies apart from this, probably they are required to keep the registration. Otherwise, they are not required to keep the registration. My view is slightly different here. My view is that they're still required to keep the registration for a very simple reason, that when you look at the definition of supplier, the 795 first of all says that all provisions of this act shall apply as if he's a supplier liable for paying the tax. That is absolutely okay. But when you look at the provisions for registration under 22.1, it says supplier shall be liable for registration if his aggregate turnover in a financial year exceeds 20 lakh rupees. It has no reference whether the supplier is liable to pay tax or not. So that is why, and as per the definition of supplier, still that person basically is supplying, a person who is basically giving the restaurant service is still supplying. So in my understanding, they are still the supplier, and that is why they are required to keep the registration under section 22(1). They may not be the person liable to pay the tax. They may not be the taxable person in this case, but they have to basically keep the they have to keep the registration. The problem which I see in this case is the next question, that is, are they required to furnish the details in the GSTR1 now or GSTR3B? When you go to GSTR1 again says details of outward supplies of goods or services which have been effected, you have to show. Again, it's an outward supply which needs to be shown. So that is also the case. They technically GSTR1 you have to show. Problem is with the rule. Rule 59 subrule 4 says details of outward supplies of goods or services of both furnished in GSTR1 shall include invoice-wise details. And there is a differentiation in the understanding of the circular and basically this rule, because with this there was a circular number 167 where in question number 10 a specific question was asked that when the supplies will be through an e-commerce operator who will supply and pay tax under 9(5), who will issue the invoice to the customer? And in this case the answer which was given is the invoice shall be issued by the electronic commerce operator. Now, if you follow the circular, that means you're not issuing any invoice. Technically, when you're not punching and issuing any invoice, you do not have anything to show in your GSTR1 here. And because again, you do not have anything to show here in GSTR1, technically, you're not supposed to show anything here GSTR3B. So either if I'm a supplier, then in that case, again, invoice should be issued by me. Probably to that extent, I would not agree with what basically the circular says. However, if one takes a comprehensive view by saying once 9(5) says that all the provisions of this act shall apply to me as if I am the supplier liable to pay tax, and that is why now under 22 the supplier is not the restaurant, then again obviously clearly they are not required to keep the registration and the question of filing returns does not arise in this case. Okay. Before we go to Mr. Arup, I will just take the second part so that first we'll take the views because we have only limited time left. I'll take the second part here, which Arup Bhai said, where he said that he will show the supplies in his GSTR1 and 3B as exempt supplies. So the question which comes is that now the supply is to be made by this electronic commerce operators. Oh, sorry, this restaurants through electronic commerce operator. Are these taxable supplies, exempt supplies, or non-taxable supplies? When you read the definition of exempt supplies and non-taxable supplies, you clearly understand that exempt supplies are which are nil rated or exempted. Clearly, the supply is neither nil rated nor exempted. Non-taxable is which are not leviable to tax. This supply is leviable to tax. So hence, both of them are neither exempted nor taxable. Next is whether it is a taxable supply. And in my understanding, yes, it is a taxable supply, though I may not be the person liable to pay tax. Hence, it is a taxable supply. As I already said, GSTR1 has a problem. You have to show invoice-wise details. Circular says I need not issue the invoice. Hence, probably my GSTR1 has to be nil. In GSTR3B, because it is not an exempted supply, I would not agree with the circular, not punch that in my exempted supply, but I will try to punch that in 3.1A as a taxable supply. Now, there also GST portal has a problem. The problem is in GST portal, I can't only punch taxable value in GS 3.1A, but I have to also punch the tax. So there, basically, again, the GST and made law and circular is on a different tangent. When you look at the provisions, you realize that provisions are basically not in sync in this particular regard. But still clearly, in my understanding, these are neither exempted nor non-taxable. And last point I'll take, and then we'll go to Ashit Bhai for his final comment. That is the most interesting part in this case. Whether now restaurant who is not going to pay tax in this particular regard can, or this cloud kitchen, can it say now I want input tax credit? So I am registered. I may not be paying tax on my outward, but I want to claim input tax credit. Now for claiming input tax credit, you have section 16 subsection 1. 16(1) interestingly does not refers to input or input services. And it only uses the word tax charge on any supply of goods or services to him. Definition of input and input services refer to the word used by a supplier. However, 16(1) only refers to a registered person of tax charge to him for the supply of goods and services to him, intended to be used in force for the furtherance of business. So 16.1, even if I am not the person liable to pay tax on the outward supplies, still 16.1 does not debar me from taking input tax credit on all the inward supplies, except obviously food, if that is blocked under 17.5. So apart from that, all of the credit in case I want to take, understanding which comes from the reading is 16.1 does not disallows me here. Only challenge here would be this notification number 11, where notification number 11 says supply of a restaurant service taxable at a 5%, subject to that credit is not available or credit has not been taken. Again, this tax needs to be paid by the electronic commerce operator. This tax needs not be paid by me. If I don't have to pay the tax, I need not look at the condition at all, whether credit has been claimed or not. That condition has to be looked by the electronic commerce operator. So what I see from jugglery of this is that there is possibility of a mischief possible in this case, where this restaurant may not be paying outward tax, but it may claim input tax credit in that particular regard. I am not saying that it's a fully tested proposition, but the manner in which the provisions are written, that is one view which is possible. Ashit bhai, because we have paucity of time, I would only request you to give your views or contrary views to this, so that we can probably take one more question.
I think there is no contrary view. Only the thing is that a lot of goof-ups has been made by introducing this clarification. Instead of clarification, more issues has come up. So whatever you have opined, whether registration is required, filing of return, it creates a mess, right? Because the portal is saying something and law is saying something, both are not synchronizing. So that is the biggest worry. More, I have certain two problems. Yash, if you permit me.
Yes, sir.
Now in restaurant, this e-commerce operator, prior to this December 21, many of us has paid the tax at the rate of 18% because they are not restaurant services.
Correct.
Now they have come out with a clarification. You know, from retrospective date, this is 5%.
Correct.
So now what I will do, I will go ahead and ask for the rent. Sir, please give me a refund. Correct. So now time limit for refund, everything will come. So this is another thing how one has to look at.
Right.
One more problem would be that those who are only the sweetmeat for farsanwala, who is giving the delivery of the goods, like vada pav de diya wahan se order, they are also covered under restaurant service. Till now we were barking no, that their rate of tax would be as per sweetmeat. Now they will come under this restaurant services from one fine morning, and they have to discharge the tax liability. So then again their whole vertical will be in two types. One is the doorstep customer who comes to their dukan and take the material. One who is supplying to somewhere. I don't know what will happen. So these are the things which I will put it before all of you. Just think about it, how it will work. Yeah, now you can carry it out.
Right. So sorry, Mr. Subramaniam, I would not take.
No problem, sir. No problem.
We'll go to last. Probably we'll leave the sixth question because we do not have time. Only last 3 minutes on this issue.
Yeah.
I am raising this issue is quite interesting. This retrospective amendment, all of us are aware that Calcutta Club Limited judgment given by the Honorable Supreme Court larger bench, in order to basically reverse that, basically it said that no VAT or service tax can be levied by the transactions happening between the club and its members because of the concept of mutuality or lack of two separate persons. Because it had a ripple effect in GST also, and all of us basically understood that now GST also cannot be levied because presence of 2% is mandatory for levy of GST. The 71AA has been brought in on January 2000, enacted on notified from effect from 1st July 2017 on 1st January 2022. So now we have a retrospective amendment in the scope of supply. I will on 2 points only basically I will discuss. First, whether all these clubs and associations, if let's say they have to pay the tax, I will not go into other questions, whether there is anything, still a ray of hope available at the higher court. We do not have time for that. Let's say they agree to pay the tax, whether they are required to pay interest and penalty also for the period starting from July 2017 till date, if for all these clubs who have not paid the tax, considering now they are covered by the scope of supply under 71AA. Anybody has a view by saying no, they are not required to pay penalty, or anybody says no, yes, they would be required to pay tax and interest and penalty also? Anybody would like to give his or her view?
I think yes, you can finish
all the
two issues. You give your views, right?
Right.
Right.
Okay, sir.
Otherwise,
so in my
we will not be able
understanding,
to- yeah.
got it, sir. In my understanding, we have judgment from Honorable Supreme Court for the previous regime, both in service tax and excise, which clearly said wherever there is a retrospective levy in respect of interest and penalty, both we have Star India Private Limited, when we have this Rama Vision Limited. Rama Vision says that when a levy is revalidated or a charge is created with a retrospective effect, there cannot be treated as an offense happened at that point of time and hence no penalty. Star India went ahead and said that interest is kind of a quasi punishment only for delayed payment, but because for the earlier period there was no failure on my part to make payment of tax because the levy has come retrospectively, so I'm not required to pay interest also. So at least in my understanding, maybe all these have to pay tax, but they don't have to pay interest and penalty. Clearly it may be a subject of litigation. Second point, whether they will be able to claim any input tax credit, there I see a lot of challenges because that 16(1), 18(1), all of them will come into picture, because for claiming credit, I need to be a registered person. At that point of time, I was not registered. So clearly benefit, in my understanding, cannot be taken until unless somebody is interested in going to the High Court and talking about the concept of GST, which is a tax on value addition. Now, the question basically which I wanted to bring before all of you is whether this has any collateral damage, this amendment which has come in the scope of supply. And why I'm saying collateral damage, I'm talking about a transaction between the partner and the partnership firm. And the partner which is getting a remuneration from the partnership firm for the activities which is doing as a partner. Why? So up till now, we have a lot of Supreme Court judgment which says partner and partnership firm are not two separate persons, but basically it's only a mode of sharing the profits between the partners, and that's what partnership firm is. Now 7(1)(a) says the activities of transaction by a person other than an individual to its members or constituents or vice versa for cash, deferred payment and other valuable consideration. Now that is also included within the scope of supply. Can we say this word constituents? It might cause a little mischief, where tomorrow one may take a view by saying that partners of a partnership firm are basically constituents of that particular person, because partnership firm is a person as per the definition of person given under section 2, and all the partners are constituents of it. Now, because of the 7(1)(a), one may say that partners and partnership firm are different. So at least we have two persons. So that problem, or at least that argument, is now gone, that partner and partnership firm are not separate. Now, once that argument is gone, any remuneration which is given to a partner, can that be brought within the ambit of GST? Now we have one FAQ issued by CBIC which says salary given to partner, only 5-6 letter answer that salary will not be liable to GST. No specific reasoning given. Under service tax regime, when same question came in for the purpose of service tax, we have this Cadila Healthcare Limited judgment of Ahmedabad Tribunal, which clearly said remuneration which is given to the partner is nothing else but sharing of a special share of the profits amongst the partners through a partnership deed, and there is no separate contract for service between the partner and the partnership firm. So Cadila Healthcare said there cannot be any service tax. Now, why the issue is there? There were 3-4 arguments which all of us had. There were no two separate persons. I think that argument is gone. Second, can we say the salary which is given to the partner is an employer-employee relationship? I think for that we have 2 Supreme Court judgments, not in respect of income tax or service tax, but in respect of other law which clearly says there cannot be a master-servant relationship between a partnership firm and a partner. So clearly, the concept of employer and employee cannot come in relation to the, at least between the partnership firm and the partner. Hence, we cannot take benefit of entry 1 of the schedule 3. So that is also gone. So what is left? What is left is whether this remuneration which is given is nothing else but sharing of profit, and sharing of profit is nothing else but transaction in money, and transaction in money is outside the scope of both goods and services. Probably that is the only saving argument which we have, because earlier we had a lot of other arguments. But again, if somebody would look at a partnership deed, they might have a different view looking at, because the salary is only given to a working partner. So somebody is working for a partnership firm, then only he would get a remuneration out of it. And probably in that case, an issue may be raised. Still, the conclusion from my side would be that still it is a transaction only in money, and hence outside the purview of GST. But yeah, other arguments which we had, no separate 2-person, employer-employee, all those things, probably after this amendment, those arguments we cannot take. Ashit bhai, in case you have anything to add in this.
No, you can go ahead.
Okay. So I think, should we close, Ashit bhai? We have already.
Just summarily, if it is possible, give,
yeah. Okay, 1 minute.
In 1 or 2 minutes you can.
Yeah, I'll do that. Last question, e-way bill and vehicle interception. What is the question here? So the question is that we have amendment basically in section 129, where in 129 now they say you don't have to pay tax and penalty whenever a vehicle is intercepted and there is a non-compliance, but you have to pay penalty which is equal to 200% of the tax amount. So that's the amendment in 129.1. That is okay. 129.1A and 129.1B. 129.1C, which is regarding the giving the security, that remains the same. There is no amendment in that. Then we have amendment in 129.6, and it's a very crucial amendment. In 129.6, what they say is that within the 15 days of service of order, which is MOV 09, if somebody does not make the payment which is written in 129.1, that is 200% of the tax or 50% of the value of goods, then in that case, all these goods and vehicles, they can be sold and disposed of in the market, and for the recovery of this amount of penalty, which is mentioned in 129.16. So basically earlier, before basically selling it, they had to go to the confiscation proceedings under section 130, give a confiscation order. Now in 129.6, they clearly say if you don't make payment within 15 days, we have a right to basically go in the market and sell it. Interestingly, with this, we have a simultaneous amendment in section 1076, where a proviso has been added. And the proviso says that if somebody wants to basically file an appeal against an order under section 129 subsection 3, that is MOV 09, then they may file it by paying 25% of the penalty amount. So we have, because in this case there is no tax involved, only the penalty involved. So they're saying 25 of the percent of the penalty amount, you pay that and file an appeal. Now the question is, let's say a vehicle is intercepted. They have this penalty of 10 lakh rupees in MOV 09. Assessee says, I want to pay 25% amount as penalty as a pre-deposit and I want to file an appeal. Departmental officer says, file an appeal, I don't have a problem. And the assessee says, please release my goods. Will you release my goods? The departmental officer says, I will not release the goods because 129.6 says, till the time you don't make payment of 100% of the penalty, I will not release the goods, so I will keep the goods. So first question, just by filing the appeal of within 15 days, if I file the appeal within 15 days, officer is duty bound to release the goods and vehicle? Answer is no. Whether officer can go ahead and sell the goods or conveyance if I file the appeal within 15 days? Answer to that is no. He may not release the goods and vehicle, but he can't go and sell it if within 15 days I file the appeal, because there is going to be a stay in the recovery proceedings by virtue of section 107 subsection 7. So that means I have filed the appeal, my goods and vehicle will remain with the tax officer till the time appeal is not disposed of. He can't sell the goods, but at the same time he is not duty bound to release the goods. Can I find an alternative approach as per the provisions of law? That alternative approach is, I give the security or that bank guarantee which is mentioned in 129.1C, 100% amount, that is of the amount of 10 lakh rupees. Then I go and file an appeal within 15 days. I deposit 2.5 lakh rupees, that is 25% of the penalty amount before the appellate authority, and file an appeal. I think in that case, there is a good case to argue by saying, I've given you a bank guarantee, release my goods because I made the payment of tax as per 129.1, read with 129 5, and because I filed the appeal, you can't make a recovery proceeding there. So practically what I see, the best possible scenario is give a bank guarantee of whole amount, pay 25% penalty, get your goods and vehicle released, and then wait for the appeal to be disposed of. However, practically that does not happen. Once you release the goods, they will encash the bank guarantee. Now for that, somebody has to go to the higher courts, explain to the courts that probably that's not the correct understanding of the law, and in those cases relief would be there. So that's how the interplay of 129.6 with this 107.6 is there. I think with this, for today's, all the case studies, we have tried to basically cover or give our views or summarize. It has been a wonderful discussion.